Is the beginning of October. Do you know where your home value is? Well, that's what we're going to dig into today because all the September numbers are out, right? And I get to geek out, look at the numbers, find out what our home values are doing, what activity is like, what the showing demand is like. And it's an election year. So that means things are already a little bit wild. But more important than any of that is that it's the first week of October and you probably only have a handful of days, maybe this weekend left to go see fall colors here in Colorado. And if you've never seen fall colors here in Colorado, I mean, this was just us this last weekend. It's our anniversary. We got married on October 1st, and our friends in Silverthorne let us use their place every single year. They're amazing people, and it was just prime in Summit County. So go, if you haven't been out yet, go check out the leaves. They're remarkable. All right. So, election year, stuff is going on. We got sky is falling from a lot of people that have their house listed right now because showing traffic has fallen off the map unless you are a good home, well taken care of with homeowner upgrades. The flippers are struggling right now with their white and gray themes out there. Not many people want those houses. They'd almost rather have grandma's house that's impeccable from 60 years ago with laminate countertops and yellow appliances than they would the flips right now at very top of the market. So let's just dig in. Let's find out what's going on. And as always, if you have any questions, just drop them down below. I'll be happy to get to them. So here we go. Starting with new listings, right? Talking supply and demand stuff here. What we're looking at here is a chart of 3 years. In September, we actually had less. We had 7,700 come to the market versus 8,000 in August. Now, where does that compare to last year? So 7,700 in 2024. In 2023, we had 6,900. So up 800. Like that's 10% more, 11% more year over year in new listings to hit the market. Okay. But there's a fun stat. So hang with me until we get all through these numbers, because I'm going to show you the real time MLS, what's going on. And there's one number here that is just so wacky that it's throwing all the supply and demand numbers like to the wayside and helping control what prices are doing right now, because prices are holding fairly steady compared to the traffic that we're getting. But active listings, okay? Active listings dropped significantly, went from 19,367 all the way down to 18,300. So 1,000 less homes on the market. Doesn't sound like a lot, but that's more than 5% month over month. Now, year over year, we're still up 10% year over year. September 2024 was 18,300. September 2023 was 16,680. So quite a bit more still active inventory to pick from if you're on the buy side than last year. And then we zoom this out. Okay. So anybody who's ever looked at a stock chart, right? Things tend to follow trends, right? And everything in the real estate market follows a yearly cyclical trend. More inventory coming into the summer months, late spring, May, June, July, and then it tapers down. And we can see that year over year. But what's interesting, so we can go back and look back from 2010, 2011, all the way over here to when we had 25 to 30,000 units on the market. And the market was just flooded and the sky is falling and everybody was losing their ass in equity. And it just kept dropping, kept dropping, kept dropping. And then we hit this low point in 2021 and 2022. And then we take this big reversal. This is what they would call a reversal, right? Where the trend starts going the other way. Okay. And then the trend just follows that. So we haven't had this much active inventory, 18,300 in September, then 2013. So over 10 months, right? We just had, or 10 years, sorry. It was the last time we had this much active inventory on the market. Okay. So typically what that means is that as more inventory becomes active, prices start getting depressed. Okay. Pending listings. Let's go on here and we'll come back to that in a moment. Pending listings actually notched up. We went from 5,700 in August up to 5,900 in September. August July and August are generally tough months anyways. People are out of town and then kids are starting back to school again. So a lot of people hit the pause button if they got beat up in the spring months. Okay. And then they pull back and they go, we'll just wait. Let's get the kids in school. Let's get our schedules going. And then, come September, we'll come back in. And same thing happened this year is what happens in most years. And that activity did pick up a little bit in spring on the number of pending listings. Okay. So that's a good thing. Last year, what was the peak? We actually just kept plummeting last year, all like a rock. So better than last year. Closed listings, though, this is what's driving everything right now. This is what's driving all the headlines out there. And this is what's frankly hurting a lot of people in the industry. I've never had so many conversations with agents who are finding other gigs, right? There just aren't that many closings. So to give you an idea, there's 5,000 closed properties in the Denver Metro MLS. And we're talking the MLS spans, just to give you an idea here. It spans much more than the Denver market, okay? So when I zoom this out, all these numbers that you see are properties listed in the Denver Metro MLS. So it covers most of the front range, okay? Doesn't cover too much east. We really start whittling down. There's a different MLS out there. Colorado Springs has its own MLS, but we still have quite a few listed here. And then Pueblo, I don't know if there'll be many in our MLS here. Yeah, just a couple of handfuls, right? So really, it's mostly the front range and some of the mountain communities if people have dual access, okay? And so when we look at this and see there were 5,000 properties sold in the Denver metro area, not including the Springs or Pueblo or Fort Collins or Summit County, there are over 40,000 licensed real estate agents. Okay. So what does this mean? Well, what this means is that how many less, a little 12% of agents had a closing last month. Okay. I'll put myself in that group. Thank you very much. But that's 1 out of 10 agents. 1 out of 9 agents actually got paid in the month of September. Like that is nutso to think about. And then you got to expand that out because it's not just real estate agents that are affected by how many listings get bought and sold. It's lenders, right? Lenders are more involved on the buy side, obviously, than on the sell side, but their business is directly impacted by how many houses people buy. Then you have photography companies, you have staging companies, you have videography companies, all surrounded and all supported by the real estate industry. When there's less closings happening, all those industries struggle, right? Contractors, even, right? This is in the last few months is the first time in the last 15 years I've been having contractors come to us. Normally we have a handful of projects going on, a handful of clients that are buying, selling, needing to fix up their houses, stuff like that we can refer them to. And we've got very little work for them right now, right? And that is all across the board. So we're starting to see some correction in contractors and their busyness. So prices are getting a little bit better on that side. Not for some of your specialty trades, plumbing, HVAC, electrical, all those guys are always going to be pricey. But for your standard stuff, painting, landscaping, handyman type stuff, like the work is being stretched a little bit thin. Okay. So closed listings down quite significantly, man, down from 5,800 down to 5,000. Year over year, we're down almost 5%. Okay. And we've been down for years in the amount of closings happening. So again, we're just continuing this same pattern here. Less businesses happening because interest rates are up. Many people feel stuck in 2 to 3% interest rates and they still don't want to sell, even though rates have dropped. It's not enough to move the needle enough to double your mortgage payment for the house you want versus the one that you have, right? Just is what it is. Days in MLS going up as it always does every single year. January of this year, man, we went up to 37. Now this is the median. Actually, let's go to the average. The average for days on market is a little bit better. 42 is the average days on market. Last year in January or earlier this year in January, we peaked out at 52. Where were we last year? So last year we were at 34. So up 24%. in days on market year over year. Okay. Month supply of inventory. This one was interesting. So we have less new listings coming on the market, right? As we can see in this chart. And because of that, month supply has dropped. We went from 3.7 down to 3.5 months of active inventory. Meaning, if everyone were to stop putting their house on the market today, it would take approximately 3.5 months to sell out of every single house on the market. It's not how it works in reality, but it's just a benchmark number. A balanced market is 4 to 6 months of inventory, and that's what just kind of the rule of thumb has been for a long time now. So we'll see what we get to over the next few months. Now, heading back to showings, I'm keeping the closed price for the end. I know, but it's interesting here because everything that I've predicted, and I don't want to be one of those that toots my own horn, but I'm pretty good at predicting the market year over year and what we're going to do historically, okay? Because you can kind of set your watch to it. Shows to pending. This is how many showings it took to go under contract, which was 10. Now, that doesn't sound like a lot, but when you couple it with how many showings per listing is happening, which is 4.5, that means on average, if it takes 10 showings to go under contract, it's taking over 2 months to get your house under contract, which lines up with the average days on market with month supply of inventory. Those numbers are going up, up, and up. No longer are the days of first weekend, 20 offers, boom, you sold for 50 grand over. The good houses that are well taken care of, that are homeowner upgrades, that are priced decently, right? Not too aggressive one way or the other, are still going on the first weekend. Okay. But that's probably 5% of listings right now. But here's what's going on is that a lot of people have been looking for the last year or two. I mean, ask me how many clients I have been looking for more than a year. And I've got a couple, not a ton, but a couple. And what happens is that you're looking, this one needs way too much. This one needs 250 grand worth of work. This one backs up to a busy road. This one's right next to the school. And then boom, that one comes up and you're like, oh, it's priced decently. It's at 925,000. Everything sells between, 800 to $1 million in this neighborhood. This is awesome. And everybody who's been looking for the last year is thinking the same exact thing. So that's why you see some of them. That's why it's really frustrating, is because you have all this stuff to pick from and you don't want it. Right. And I don't blame you. I don't want the stuff backing up to a busy street either, or next to a school, or behind commercial space, or, next to a cemetery. And that seems to be the stuff that's sitting active. If it is not ideal right now, you are struggling to sell. Okay. If you try to overprice and your house is less than perfect, with homeowner upgrades, you're struggling right now. If you wanted to flip a house and you're putting in the basic builder grade stuff and it just looks like you're run of the mill flip, you're struggling right now. People who are winning, homeowner upgrades that are priced decently with a very well maintained home. And then you are getting into multiple offer competitive scenarios because everybody is doing the same thing out there. Okay. Now, what has that done to the closed price? Well, over the last month, we have dropped. We have gone down from 569,000 down to 560,000. So down 9,000, 2% almost month over month. We're down from 585 in June, which was the peak, which is generally always the peak. Okay. Down to 560, 585 to 560 in the last few months, down 25,000. So more than 5%, right? Well, what's going to happen the rest of the year? Well, I'll tell you in a second. But year over year, what that means is that from September, we were 564. Now we're at 560. We're down about 1% year over year price wise. And, so, I mean, you could have bought a home 2 years ago and there's a good chance you're flat, right? You're just break even on it still if you were going to sell it today. But after selling costs and stuff, you might actually be in the red. So what's going to happen the rest of the year? Well, same thing that happens every single year. And we can look at it here. Now let's get rid of 2022 because we went from 600 all the way down to 520. We had a 15% adjustment in 2022. In 2023, we went from 575 down to 535 as the median price. So $40,000 down. What's the quick math on that? 8% within 5 months. Okay. So June was our peak here at 585, 10,000 more than last year. So if we don't get to 535 range, like I would be surprised. So I think we're going to continue dropping, and being an election year, showing activity is generally down. We'll see what happens, but here's the good news is that interest rates have started to drop. We already got some buyers off the fence, right? We had about a 2-week period in August that was busy. Lots of stuff was selling quickly, and then poof, it went dead again. Okay. And now the Fed, Jerome Powell, talked again, and he said, hey, we're expecting 2 more rate cuts by the end of 2024. So going from 6%, which is where rates are now, likely we'll be at 5.5% by the end of the year. And then he said we're on course to potentially make 4 drops this next year. And if they're each 25 basis points drops, that'll mean by the end of 2025 we'll be at 4.5%. But I think what will happen is that prices will start to spike in spring again. I think we will see a strong spring, right? So if you're a buyer, move now and get off your butts, get your pre-approval done, and act now from now until about January, because February is an awkward month. Some years it can be crazy busy, multiple offers. Some years it's a little bit dead. March and April historically are the 2 best months to be a seller. So get your poop in a group if you're a seller and start preparing for February, March, and April to be on the sell side. If you're a buyer, that's when you're going to start to hit the brakes, unless you have to, right? I get that. Sometimes you just have to. And there is more inventory that comes on the market, but you better be prepared to compete, because if rates do keep dropping, right, you can renegotiate a price and get a price drop, 25, 50 grand, 100 grand off sort of stuff, depending on your price point. But what you can't do is you can't renegotiate your purchase price after you bought it. And what I mean by that is you could buy it today at 6%, right? If rates drop down to 5% in 6 months to 12 months, well, then do a refi on your house at the current purchase price you're at, instead of waiting until March or April to buy at 10% higher than we are right now and be with everybody else, and then have to have interest rates drop even further down for it to make sense to do a refi at that point, right? Everybody's on the same page with how they kind of look for houses and when they're going to refi. So what you want to try to do is be on the opposite side of that, right? Buy when people are hurting and sell when people are, exuberant about the market. Okay. Now, we're down month over month on pricing. What I want to show you, but we're not down horribly, right? It's not like we're down 10, 15, 20%, stuff like that. We're down a few percent this year, which is completely normal. What's interesting here is, when I go to the MLS, right, and I look at this all the time, is I look in the last 2 weeks. Okay. What's the activity been like in the last 2 weeks? So in the last 2 weeks, there's been 3,200 new properties to come to the market. Okay. Remember that, 3,200. Okay. Under contract, meaning how many properties have gone under contract in the last 2 weeks? 2,900. So net 300 more properties coming online than going under contract. Okay. How many closed in the last 2 weeks? 2,800. So even less than what is going under contract, because lots of stuff falls out of contract. Now, here's where it gets a little nutty. Withdrawn, meaning temporarily removed from the market. 50% of properties that are withdrawn today become expired in the next couple of months. Okay. People take it off, either want to do some work on it, or let's just reassess. We're getting into the holidays here. Do we really want to be selling in November, December? I don't know. Let's just think about it for a minute. In the last 2 weeks, 600 have been withdrawn, but that's not even the crazy part. The ones that have gone expired, 1,400 in the last 2 weeks. 1,400 when expired. That's almost half of everything that closed In the last 2 weeks. We closed 2,800. We expired 1,400. Yeah, half. That is a nutso number. Why? Well, let's go to Redfin and check out some of their stats. They're fun. They're always good to watch what's going on. And what I like to look at is price drops. Okay. How many properties on the market have had price drops week over week? These are the motivated sellers. Okay. So the percentage of active listings with price drops this week was 6.6%. Okay. Almost 7% of the entire, 18,000 properties that were on the market had a price drop. What's that number real quick? I don't know, 1,000 properties. Off the top of my head, had a price drop this week. Doesn't mean they haven't had one before. It just means that they had one last week. And so we can see that that number is well ahead of 2022 when we had a large correction. 2023 well ahead there too. And so these are the people that are needing to sell. And I look at their stuff a little bit because they pull from just the Denver metro area. Let me refresh this here. So Denver Metro month supply of inventory. So they're showing 16 weeks. So that's a little over 4 months supply of inventory, which, would put it in a balanced market. The numbers we were just looking at were the entire front range. This is just Denver proper, right? So as a lot of people are leaving the city, we are getting more and more inventory. So just an interesting thing to watch here, right? Whereas the new listing median price is up, the median sales price is down. So what that tells me is people are still exuberant about what they think they can get for their house. Many people are wrong. And that lines up with expired listings, the number that are going withdrawn. And that's just kind of what happens when a market is a bit more balanced. It takes a long time for sellers to catch up when their house needs work to accept the fact that their house needs work, right? So again, I'm here for you guys. If you got any questions, you can actually scan this QR code. You can get in touch with me directly. I got a bunch of tools in the description below for you. And until the next time, happy housing.